The entire cryptocurrency market has seen a sharp decline this week, with the price of Bitcoin falling below 10,000 for the first time since last November. According to a new Yahoo Finance report, overseas factors likely contributed to the crash. Daniel Roberts is a senior writer for Yahoo Finance and author of that piece, and he joins me now. Welcome, Daniel.
Hey, Elaine.
So you discuss how China and South Korea's actions are impacting the markets. Can you explain more what is happening there?
Yeah, it's really interesting because whenever the price of Bitcoin goes down, two things happen. Mainstream media freaks out and they say it's a crash, it's a crash.
Sure.
And usually it really isn't. This time, this was a bona fide crash. I mean, huge losses. And then they also try to suss out what's causing this crash. And usually it isn't really easy to tell. There are a number of different factors, sort of like the election. Everyone wanted to find the one thing, and it wasn't just one thing. But for once, this time, it's very clear what it was. China and South Korea. So South Korea last week, a government official announced that it was going to introduce a bill to ban Bitcoin trading. Everyone freaked out. Coins dropped, although not by as much as they did this week. And then the president of South Korea kind of pulled back on that. But we still don't have clarity. So that was uncertainty. That was fear already that existed kind of over the weekend. Then we come in Tuesday, and Monday night in China, we find out that China, which has already banned ICOs, that's initial coin offerings, these super risky, crazy token sales, and has also banned Chinese Bitcoin exchanges. Now China also wants to ban Chinese consumers from using international Bitcoin exchanges. So no more Bitcoin trading in China.
Wow.
And that was enough to really drive this market down. All of this is a reminder. Asia has a huge influence on the price of these cryptocurrencies.
So South Korea, China, are there fears among investors that regulations from the U.S. could be next?
I think absolutely. But we've known that U.S. regulation is coming. There's already a sort of semi-regulation, I would say. For example, we saw that CBOE in Chicago and CME Group, also in Chicago, quite recently started doing Bitcoin futures trading. To do that, they had to get approved by the CFTC, which is the Futures Trading Commission. So there is a light sense of regulation already in the U.S. Do we think more is coming? Absolutely. But that might be a good thing. I would say that most American buyers want regulation. There's sort of a fun philosophical push and pull between the libertarians, who, those are the true believers who've been around since 2009, and now the people on mainstream financial networks, Wall Street, who want regulation. But in China, I mean, we know that they don't enjoy the same open free internet that we do in America.
Right.
I mean, the idea that they're just going to block access to these sites, that's very bad. And I should mention, 80% of all Bitcoin mining happens in China. They also want to shut that down.
80%?
Yeah.
Wow, that's incredible. Well, can you put into perspective for our viewers just how vulnerable these markets are?
I think they're volatile. Look, if you actually look at the last 12 months, Bitcoin was less volatile than it has been in any year prior. So the truth is that Bitcoin, at least, which is the top of these coins, is less volatile than it once was. But look at the last 3 days. I mean, up and down. It's a wild ride. And people need to be ready for that. I mean, I think the scariest thing happening since the end of 2017, when suddenly all these coins went through the roof, is that you're hearing regular people who have no idea what any of these are. They don't understand the technology behind them, and they don't care. They just want to get in. They think, well, these are going up. I can make some fast money. And that's scary because, as we've seen from the last 2 days, I mean, take a coin like Ripple, which is one of the leading cryptocurrencies. The ticker is XRP, lost $32 billion in market cap in the last 24 hours. So people need to know that, just like going to Vegas for the night, you should only put in what you're willing to lose. And you want to put a little bit of money into this, fine, but be warned. You know?
It's not at all a sure bet at this point. Well, so as virtual currencies began spiking and grabbing people's attention, you know, a lot of people are looking to get in. That's made it difficult, though, for these exchanges to approve new customers. So how important is that? I mean, how big of a problem has that been? Yeah,
I think that's another big warning sign, and actually it's sort of been undercovered. But Coinbase, that's the leading U.S. brokerage site, kind of the easiest jump in and sign up for an account and buy Bitcoin. That's the place most people would go if they don't know that much about the market, easy to use. In fact, Coinbase briefly became the #1 U.S. app recently. Now, Coinbase isn't as liquid as you'd hope. I mean, let's say the market is crashing. Often you'll log in and you'll find, ooh, we can't do a trade right now. We have an outage. And so people should be warned, because suddenly when prices are falling and they want to get out, they can't always get out as easily as you could if you were calling, say, your human being broker, saying, get out of Facebook. Oh my God, it's crashing. I want to sell. So they should be aware of that. I think it is a problem.
All right. A lot to watch. Daniel Roberts of Yahoo Finance. Thanks so much for stopping by.
My pleasure.